There are so many investment options available, but you need to remember that it's crucial to recognize that not all investments qualify as assets capable of safeguarding you during economic downturns. Therefore, it would be valuable to gain insights from a seasoned investor with decades of experience to identify the two assets that can provide such security for you. Here's what Jim Rogers has to say as an investor who's seen the worst and the best in the economy. Greetings, esteemed members of the Nova Society. Get ready for an extraordinary financial journey that's bound to reshape your future. If you haven't joined us yet, hop on board and subscribe. Possessing a wealth totaling $300 million, Jim Rogers is an American financial analyst and investor currently residing in Singapore. He serves as the chairman and co-founder of Soros Fund Management and played a pivotal role in launching the Quantum Fund alongside George Soros. Jim Rogers has gained acclaim for his financial expertise, and he holds a treasure of brilliant financial insights acquired over his illustrious career. These insights are concealed within his sharp intellect and limitless charisma, and he is eager to impart them to you today. In the past, as Rogers mentioned, when central banks become anxious and resort to printing more money, inflation tends to resurface. Historical records demonstrate that no country remains dominant indefinitely. Typically, they thrive for about 100 to 200 years at most before reaching their zenith and entering a decline phase. He believes we aren't exempt from this historical pattern, but one issue with history is that people often fail to learn its lessons. We've had a recent president who appeared to disregard history, even asserting he was more intelligent than history itself. Personally, Rogers doesn't claim to be more astute than history, and history unequivocally shows that no nation, and often its currency, can maintain dominance indefinitely. Currently, the United States holds the dubious record of being the largest debtor nation in history. With troops stationed in over 100 countries, some argue that we might be overextended in terms of finances, economy, and military presence. It seems they may have a valid point, and this concerns him greatly. If you aim to acquire knowledge and thrive, history provides a crucial lesson. Unless we heed the insights from the past, we are destined to relive them. Rather than being apprehensive or evasive about history, we should embrace it as a source of wisdom and apply its lessons. History unmistakably illustrates that no nation has maintained its supremacy for longer than a century or two before eventually reaching its zenith and experiencing a decline. As he said, "It's not a good time to be young in America because what the young people are going to inherit is mind-boggling. It disturbs me it's good to be old and that I don't have to pay. I get the benefits, they're borrowing a lot of money, spending a lot of money pretty well. I'm old, okay it helps me but it doesn't help the future." A century ago, Britain stood as the wealthiest and most dominant nation globally, with no close second. However, within 50 years, they faced bankruptcy to the extent that the IMF had to intervene at Heathrow Airport to assist. This historical precedent demonstrates that such transitions are possible, and they often transpire with symptoms like excessive money printing and related issues. While Rogers doesn't foresee a similar scenario in 2001, 2021, or even 2022, it's a trajectory we're currently on. From his observations and experience, the excessive money being printed needs a destination. Constructing physical infrastructure or factories is time-consuming, but purchasing anything online is effortless. Consequently, people are investing heavily in financial assets, which is a logical result of the increased money supply. However, this pattern has never proven to be permanent, even though there may be optimism that it will be different this time. Currently, the United States holds the unenviable position of being the most indebted nation in history, as per the Bureau of Economic Analysis' latest estimate of the nation's net international investment position, IIP, at the close of 2020. Americans owe the rest of the world $14 trillion more than the world owes to America. Historically, such imbalances have had significant consequences. To understand the dynamics, consider Britain in the 19th century. Although it was the most prosperous and advanced nation during that period, Ireland, which was part of the same empire, suffered one of the worst famines in Europe. Over 90 years between 1780 and 1870, real GDP per capita nearly quadrupled, reaching $3,263 per person. the government's role in inflation is often linked to the excessive printing of money. Real assets seem to be the only things still reasonably priced amid this backdrop, as many stocks and financial assets have inflated to unsustainable levels. Sugar, for example, has plummeted by 70% from its all-time high, and silver has also seen a similar drop. These figures suggest that these assets aren't in a bubble. Inflation typically intensifies when the money supply grows more rapidly than the national economy. This year has witnessed a 17% loss in the S&P 500's value and a more substantial 30% drop in the tech-heavy Nasdaq, officially marking a bear market. Janet Yellen, the 15th chair of the Federal Reserve, voiced her concern about inflation in an interview with CBS News. Notably, during her tenure, she oversaw initiatives to sell mortgage and treasury bonds that the Fed had previously purchased to stimulate the economy. Under her administration, employment and wages increased, while she kept interest rates low. In 2008 we had a problem because of too much debt. Since 2008, the debt everywhere has skyrocketed by a gigantic amount, so it would be my view that the next time we have a problem is going to be the worst in my lifetime. This may sound like some kind of wild statement, but I look out the window, the debt goes higher every day, he said as he emphasized the growing debt of the country. Rogers understands what happened in 2008, and it's likely to be more severe in the next crisis. Eventually, we might even experience hyperinflation, although it's doubtful we'll reach the levels seen in Venezuela. In Britain, for instance, they faced a very serious situation where the currency's value declined by 80% against the US dollar over a few decades, which is a substantial decline. He doesn't anticipate a quick transition to hyperinflation that typically occurs towards the very end of a prolonged economic decline. Venezuela, for example, has been in a downward spiral for a significant period. Zimbabwe, once the wealthiest nation in the British Empire, has experienced a long decline as well. Unfortunately, Mr. Mugabe learned how to devastate the country over decades, and it ultimately climaxed in staggering levels of inflation. This is not the time to worry too much yet because Rogers said, "I don't think we're going to have it that quickly in the US. Even if we're going the right way in Britain, don't panic yet. But it doesn't mean we can't have serious inflation and a decline of the standard of living and a decline of the value of the currency, and we probably will." History makes it quite evident that certain patterns tend to repeat themselves. For instance, the combination of easily accessible credit and relaxed lending regulations played a pivotal role in creating a housing bubble, which was the underlying cause of the 2008 financial crisis. When the bubble burst, many people lost their homes and jobs, leading to the Great Recession. Comparing major currencies in 2022, the US dollar witnessed an increase of over 10%, reaching levels last seen in 2002. However, if the Federal Reserve, Fed, were to change its course from its aggressive interest rate hike agenda, the dollar's value could decline. In contrast, the British pound has depreciated by 80% against the US dollar. This depreciation reflects the sentiment that tying a currency to a single country might not be ideal. The European Union, EU, has been contemplating ending its 19-year-old monetary union and potentially introducing parallel currencies for its member countries. So, if you're in a permanent job and believe that an economic downturn won't impact you significantly, it's important to consider that inflation can lead to demands for higher salaries. While this may boost your short-term income, it can eventually be counterproductive as it may lead to job loss due to the natural unemployment rate. However, there have always been individuals who emerged from such crises in better financial positions, and some even became wealthy. For example, during the German collapse in the 1920s and the American Depression in the 1930s, a few individuals managed to amass wealth, although most did not. Rogers personally holds investments in silver and gold, with plans to acquire more in the future. He emphasizes that his timing may not always be precise, but he firmly believes that both precious metals are poised for significant appreciation in value. It's worth noting that both former Treasury Secretary Yellen and Chairman Powell have discouraged investing in gold and silver, suggesting they are outdated investments. "I'm an old peasant, so peasants know when things go wrong we want to have a little silver over in the closet." We want to have a little gold under the bed because we know that when things collapse, gold and silver will help you. It won't take care of it, will help you. So I am buying both, and I will buy more. I'm also buying commodity indexes because by definition, if commodities go higher, that's inflation. His statement says that silver and gold are two of the good assets to have. When we observe the increase in the price of rice, it's an unmistakable sign of inflation. To hedge against this, Rogers has investments in rice and other agricultural commodities. He also has a diversified portfolio that includes various commodities through an index. This strategy is based on the premise that if inflation continues to rise, these investments will naturally benefit. Now, if we consider the current state of bonds worldwide, it becomes evident that they are in a bubble. Bond prices have reached unprecedented highs in global history. Given this, Rogers wouldn't recommend starting with bonds as a standard investment option, unless there are specific circumstances that make them appealing. The 1930s were indeed a challenging period for the average American. The stock market crash in 1929, followed by subsequent crashes, created a chaotic economic environment. However, even if you didn't become extraordinarily wealthy as an investor during this time, it was possible to secure a decent financial position by making prudent choices. Investing in assets that are resilient to inflation, such as commodities and real estate, was a viable strategy. Commodities and real estate. Commodities like gold and silver typically see their prices increase during periods of inflation. As a result, they are suitable additions to an investment portfolio that seeks protection against rising inflation. It's important to note that stocks and bonds do not consistently outperform commodities when inflation is high, although they tend to perform better when inflation rates are on the decline. Let's consider real estate. Rental incomes tend to rise alongside real estate inflation, providing property owners with increased cash flow. Additionally, rising interest rates can drive up demand for rentals in an inflationary environment. For instance, Carl Icahn, a renowned billionaire investor, demonstrated his keen understanding of market dynamics during the economic crisis. He purchased the bankrupt Fontainebleau property in Las Vegas for approximately $155 million, a bold move that eventually yielded substantial returns when he sold the property for over $600 million in 2017, more than doubling his initial investment. Carl Icahn is known for his value investment philosophy, often investing in companies that are undervalued by the market. He has a knack for spotting opportunities when others are reluctant. This value-based approach is shared by fellow billionaire investor Warren Buffett. In conclusion, value investors like Carl Icahn and Warren Buffett have often turned to assets like gold and silver to protect their wealth. While these assets have been reliable in the past, it's worth considering that market dynamics can change, and new opportunities may arise. As history has shown, no country can maintain its position at the top indefinitely. Our rich history has shaped us into a diverse group of individuals with varying backgrounds and perspectives, and by learning from each other's successes and failures, we can continue to grow stronger and more prosperous. As you diligently save for the future, it's essential to allocate a portion of your income toward investments in assets and commodities. These have demonstrated their ability to provide security for both you and your future. While the exact timing of the next major economic downturn is uncertain, it's wiser to be prepared now rather than facing potential hardships later on. If you want to learn more about personal finance and generational wealth building strategies, visit our channel and subscribe for more enlightening videos to increase your wealth.